Hi, everyone. Welcome to Analyze Your Trade, episode number 45 for August 14th, 2018. We are broadcasting live on YouTube at 4:30 p.m. Eastern Time. And I am also posting all the episodes as podcasts. So if you listen to podcasts, just search for Timing Research on Spotify, iTunes, Stitcher, or wherever else you listen, and be sure to subscribe to Timing Research there. Today, we will be discussing your trade ideas, and over the past few days, about 40 people submitted up to 5 symbols each. And I have put the list together for today, which you should be seeing on your screen while I'm talking now. And so we're going to get through as many of those as we can. My name is David Kosmeter. I'm the creator of TimingResearch.com. And I developed this show with Dean Jenkins of Follow Me Trades, but he is off this week as moderator. And Matt Buckley is back to moderate today, so I'm going to turn it over to him.
Thanks, David. Good afternoon, folks, or good evening, good morning, depending on where you're coming in and joining us from around the globe. As David said, my name's Matthew Buckley. My call sign's Whiz. Currently the founder and CEO of Top Gun Options. And we can talk about that in a couple of minutes here, but we're really gonna have a good session this afternoon. Got two 500-pound heads, so to speak, as a wing woman and wingman today. Anka Metcalf from TradeOutLoud.com and Christian Fromhertz of Tribeca Trade Group as well. And we obviously have a lot to talk about. It really seems like a minute in this market is a lifetime. So we have a lot to cover. Some good symbols on this list, some symbols I've never even heard of. So it's going to be a good session. Looking forward to it. So let's just kick off. Anka, why don't you give us or give everybody that good old executive summary of your background and what you do today with TradeOutLoud.com.
Hi guys, hi everybody. Excuse me, hi everybody. My name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade the futures and the equities market. I've been doing this for the last 15 years professionally. And prior to taking it on my own, I come with 10 plus years in investment banking. I'm also the designer of an institutional proprietary trading system that is based on price support resistance, 7 layers of support resistance, also specific trigger times, price correlation, specific price zones. I'm a permanent contributor to some of these fine media outlets like Stocks and Commodities, Your Trading Edge, Benzinga, The Money Show, Trading Pub, and more. And I just came back from Chicago, and I know Matt was mentioning Chicago a little bit earlier. So we're planning an event in Chicago, and then later on this year, or I think perhaps next year in Boca Raton when things get a little bit chillier here in Northeast. All right. So other than that, looking forward to talking about stocks with you guys tonight.
Yeah, absolutely. We had Anka and I had a great event down here in God's waiting room a couple months ago. It was last month. Had a great time, a lot of great speakers, and I know a lot of people are chomping at the bit asking when we're going to do our next one. So just stay tuned, and I'm looking forward. So all right, Christian, how about your background, my friend, and what you do at Tribeca Trade Group?
Yeah, sure. And a pleasure to be on the panel again. Looking forward to some of the symbols that are on the list. But my background is I was a trader with Bank of America Merrill Lynch for a long time. I was a director on the ETF desk over there. And really kind of goes into my trading style of a macro trader. With ETFs nowadays, you could trade basically every nook and cranny of the global market that's out there. And I established the Tribeca Trade Group a couple of years ago, and I run an all-day trading room where we really look for a lot of momentum trades. We look at trend trading, and I come up with my own idea generation. Also use option flow and ETF flows quite a bit in reading the tape. And just like for example today, we caught the retail move pretty well. That was something that I wrote about in my weekend newsletter, kind of prepared people for. And, and then on the other side of the globe, we're seeing all the Chinese internets break down, which we're on top of as well. So again, looking forward to kind of going over some of the symbols that are on the list, and happy to be on the panel again with you guys. Thanks very much.
Yeah, I definitely want to hopefully save some time if I didn't see anything on there either to talk about the FXI or just China in general, man, because some of those massive market swings we saw a couple months ago were on, quote, fear of a trade war. Well, we're in the middle of one now, and it doesn't really sound like the adults are talking, whether it's Steve Mnuchin, Larry Kudlow, or Peter Navarro, man. So it'll be interesting to get your take on what's going on with some of that stuff, because I definitely don't follow some of that stuff, so I'll defer to you, Christian. As I said, folks, real quick, my name is Matthew Buckley. I run Top Gun Options. I was years ago, a lot longer than I'd like to admit. So I was average retail trader, just kind of applied everything I was learning flying a fighter airplane for the United States Navy to my trading, having a strategy, being disciplined, managing risk, contingency planning, asking what could go wrong or right before even going on a mission. Applied it to my trading, and it worked really, really, really well. I eventually popped up on the radar of one of the largest vol arb trading firms in the world, called Peak 6 Investments, headquartered right there in the Board of Trade. It was also the founder and CEO of the Options News Network, ONN TV, which was kind of the CNBC for options. John and Pete Najarian do a pretty good job on CNBC, essentially paying lip service to options because, when options were first made, I'm pretty sure a bunch of white dudes with cigars in a back room tried to make it sound complicated so they could keep it all to them. But it ain't rocket surgery, as Christian and I are most likely evidenced by. But all right, folks. So let's go ahead and let's get started with Anka. This is a DPW, which is let me just pull it up right here. I've never heard of it, and it's a 48-cent stock. What's your take on it, Anka?
Oh my goodness. I don't trade stocks that are trading less than 1 million shares a day. But this one, oh my God, technicals are looking very bad, trading at 48 cents. I would stay away from it. It's just this, stay away. Okay,
sorry
about that, guys. I was talking to myself there. Anka, you had me at I don't trade. You had me at I don't trade. Christian, you might have more of a take on me. I don't trade anything that's under $10, to be honest with you. And if I do, I just trade the stock because anything under $10 is an option in and of itself. So I don't even know what this does. And at 48 cents, stocks are priced the way they're priced for a reason, and it's down here at 48 cents for a reason. Christian, what's your take, my friend?
Yeah, I think you guys hit the nail on the head. I don't have much value to add here on this one. I know it's a crypto name. It's one of those names that flew up. If you look at my chart, this thing went from like 50 cents to $5. We're going to be probably have one of these and that we'll be talking about for a long time in terms of what happened with all these crypto and blockchain names that went up just as fast, that went down just as fast as they went up, and this is a good example of a group of stocks, and Riot belongs in this category. And there was not a thousand, but there was many other names that kind of went up and they put blockchain in their name. And we kind of saw that song and dance, before with the .com bubble. I mean, this happened very quickly. People were changing their name really quickly. So, it's one of those names, and I would just defer to what you guys said. I really wouldn't touch it either. Very risky penny stock. Stay away from it. But it is amazing how quickly those blockchain and cryptocurrency equity names, shot up and moved down just as quickly.
I agree, man. Here's the way and Anka, you can chime in here if you want. I am staying away like the plague from any of the cryptocurrencies because, as Christian said, they're literally, if you think about the crypto space, folks, there's literally going to be thousands of potential cryptocurrencies. So you really are in the Wild West. My own personal rule of thumb is when they start trading options on some of these things, in my opinion, that's when they're kind of maybe mature-ish. and might have some staying power. I personally am staying away from the cryptos, but if you're just itching for a crypto, so to speak, trade the, like Christian said, look at the underlying, look at the foundation, look at the blockchain technology. So maybe trade the foundation of the cryptos, not trying to, like Christian said, pick a winner. You know, you're either going to pick an Amazon or you're going to pick a pets.com or PetMeds, and it goes to zero. So be very, you know.
I do have my own special indicator too for you know, for the block for the crypto names.
Mm-hmm.
When CNBC stops bringing on someone every day on the Fast Money show to talk about being bullish cryptocurrencies and takes the damn huge ticker off the screen, that makes me buy these names.
That's a great, I love that. I agree with that indicator. I'm going to add it. Anka, how do you, because I know.
I love that indicator. And I also love the moon indicator, quote, moon indicator with planet, you know?
Mm-hmm. Exactly.
Right next to that one.
Do you, so, and we should have agreed beforehand if we were going to talk cryptos, we all had to do a shot if we mentioned the word crypto or Bitcoin. But Anka, do you trade any of that stuff, or is it not on your radar yet?
And in fact, I did open an account last year because everybody was into cryptos. And by the time I opened the account, obviously it took a long time to open the account. So I just wanted to get my feet wet because it was like the greatest thing. Especially September, October, when I opened the account, and you know, you had Bitcoin that was rallying, you had everything that was making new highs after new highs. There was no legging in and anything, and I just wanted to get my feet wet. So what I did is I actually got a little bit of Ripple. So I wrote it and then I cashed in everything and around Christmas, and I did great in it. So I haven't traded that that account since then. It is still there. But I I even pulled my funds out. So.
Mm-hmm. Okay. So, well, it sounds like there was obviously some skill involved there too, but also maybe some luck. I'm hanging out to the cryptos.
Yeah, I think, and I agree that everybody's trying to make a lot of, it's trying to, apply technical analysis to it. And sometimes it, sometimes it works. I mean, I could see the patterns. Obviously, I'm on 100% technical trader. Mm-hmm. Well, maybe 1% fundamentals, but I trade a chart, and sure. I'm not very thrilled about the way the cryptocurrencies are going. Maybe they will reverse sometime, but I'm just staying away. I'm just you know what? I have so much on my plate, and there's so much to trade that I really don't want to expand into and don't want to open another door.
Well, I think you nailed it, and to steal a line from a very cheesy movie that I'm familiar with from Top Gun, it's a target-rich environment. I think there are enough targets out there where you could potentially make some decent money without just you're literally running around the Wild West. It's not regulated, which some people say is great, but it's also not regulated, which is freaking horrible. I'll leave it at this. I know for a fact, we could all wake up tomorrow and literally your brokerage account, your checking account, everything that is electronic could be at zero. Mm-hmm. And the reason it's not is because the United States is told, whether it's China, Russia, North Korea, even North Korea, we said, if you ever mess with our financial system, that would be considered a first strike. Because, within hours, people literally would be, rioting in Walmart. We haven't said that about the cryptocurrencies. If you remember, what was it, 2-3 months ago, kind of a Wall Street Journal hidden story was, North Korea stole 60 million in Bitcoin from here and is hacking into stuff. So be very careful on stuff that ain't super protected by Uncle Sammy or, love or hate the government and regulation. It can be good. So Christian, anything to close out on the cryptos or anything?
No, I think you guys covered it perfectly. So.
Okay, good. All right, now let's put some meat on the bones here. And Anka, what are you thinking about old AT&T?
AT&T. Okay, let me just type it in here. Well, AT&T would interest me if it trades over this prior monthly bar. I would say probably it would be a buy. I would have it on a watch $32.80. Not one of my favorites. I don't like to catch falling knives, and I think it has been down trading for some while. I could see some sort of a double bottom here at the $31 zone. There's also a 200 moving average, simple moving average. Maybe it's worth a second look, but only if it breaks over $32.60. And as target levels, I would look somewhere into $34.
Okay, perfect. Christian, how you feeling about old, what was it, American Telephone and Telegraph, whatever the hell it used to be called?
Right. AT&T, I have no position in it. I don't see myself really getting a position in it. I think it's in a downtrend. I think it's one of those stocks, I very much will use things like the 200-day moving average. And by the way, I think it's always good to kind of go over what we've got on our charts. I think our charts probably between the three of us look a little bit different, but I rely on a couple different things. I rely on moving averages. Why? Because it just really tells me where the trend is, short-term and long-term trend. 200-day moving average, I love to use. It just really kind of keeps me managing, getting into positions that are either in uptrends and kind of staying away from ones that are in downtrends. Sometimes stocks will stay in downtrends for a long time. This one looks like a downtrend. The only thing that would get me into this, and I know that we talked a little bit about option activity, but if I happen to see some really big institutional call buying where somebody was positioning, then I would kind of open my eyes and say, okay, maybe I'll take a counter trend trade in AT&T. But I think this thing is in a downtrend. I think it looks ugly. I think it's right up to, it's coming up to resistance, which is the 50-day moving average. So, if you bought this for a dip play, probably now would be a good time to sell it. Where it would prove me wrong is if it gets above, I would say, what is this, 32.40. So again, on my charts, this is called the value area. It gives you really good support and resistance levels for breakouts and for where buyers and sellers have met up previously. But where this would prove me wrong, would be above 32.5. For now, I would stay away from it.
Yeah, I'm not going to dogpile on here, Chris. I didn't think you nailed everything. That's just not a decent looking chart. I got to be honest with you. I don't like you. I don't have a position in it. I'm not super big into the telecoms. It's just not a sector that I trade. Aren't they in some sort of takeover or this or somebody's buying? I just technical analysis wise, that is not that's not a strong looking chart there at all. I just don't. I don't see any love in there unless you're bottom feeding. And again, nobody rang a bell at the top here and said, "All right, everybody out of the pool," and nobody's ringing a bell here at the bottom saying, "Hey, everybody jump in the pool. It's great for AT&T." So I'm not big on this at all. Okay, WYNN. So this one's going to be good. So Anka, are you trading WYNN at all? And what are you seeing on the chart? And you might be on mute like I did.
Okay, unmuted.
There you go.
All right. So WYNN, not a big fan right now. I think it still has the potential to move a little bit lower. I'm looking at the weekly charts, and because I'm a swing trader, I mostly look at higher time frame charts. So I navigate a little bit towards the weekly and the monthly charts when I initiate trades. It is into minor support level. So if you could see from 2011, we had a peak at the 151 zone. And right now it's still pulling through that peak that was already established back in 2011. And to me, it doesn't really look like, it has any kind of signs of reversals just now. So I would it is a name that I love to trade. It is great, especially for options, and you guys know that, options guys, but I don't think it's ready yet. So I would look, this is not a sort of trade that you would actually look for a short or for a long, especially to where it is trading right now for me. And I think it's in the middle of nowhere. And we need to see some positive signs, especially on the weekly chart, for me to get a little bit of interest. Let's say if things may shift, and if next week we may look to reverse over $150, maybe I will take a look at it. But other than that, not a great interest. The moving averages started to fan out on the daily chart, which means that we may still have more acceleration to the downside. Not a big fan. I would stay away from it right now. Love the name, trade the name. However, now I'm just SOHing.
And real quick, Christian, before you talk about WYNN, I think you said something a couple minutes ago when you were talking about how you trade the moving averages. One of the reasons, folks, that the moving averages are important is because Christian looks at them. Anka just mentioned them. I mentioned them. So we're not the only two dudes and woman who look at moving averages. So, and obviously, until the machines become self-aware and kill all of us, there's a lot of algos in there as well that either get triggered to go short or long when certain moving averages are hit. So he mentioned that in passing. I just wanted to shine a bigger spotlight on that because there was some good meat in there. So Christian, what do you think about old, well, I guess it ain't Steve WYNN anymore, or it might not be named that much longer, but do you trade WYNN at all? How do you feel?
Yeah, sure. Yeah, I mean, and that's just to echo what you said about the moving averages. Yeah, if everybody's looking at them and making decisions based on them, you know, to me, that's also part of it as well. So absolutely. When I wanted to give you kind of a hat tip on this. I think the last time that I was on when we were going over charts, WYNN came up previously, and you said that you've been short this name, and I don't know if you're still short it, but I know that you were talking about how you like to short the name, and so great job on this. This was a couple of months ago.
Well, we have a Jan 20. To Anka's point, it ain't going out of business anytime soon, but yeah, we've been short term selling front month upside calls or bear call spreads as this thing kind of melts a little bit. Yeah.
Yeah, well, awesome call. So I just wanted to point that out because I remember from the last time that I was on with you. So kudos there. Yeah, for this, and I remember when we went over this, and I'll say the same thing. So first of all, it is definitely broken down below the 200-day moving average and rather quickly. I think it's kind of in the falling knife zone right now. I do see a kind of level taken out here, but I would not be looking to catch this. And one of the things that I said the last time was watch these Macau gaming numbers, right? So these numbers are issued every first of the month. So you've got a couple weeks. And one thing that they've shown, they're still growing, the Macau numbers that come out, but they're decelerating. And all of this casino stocks, it's not just WYNN, MGM, Las Vegas Sands, MLCO, they're all moving down. So you've got the Macau numbers that have been declining for the last three or 4 months. So I would personally would wait until those numbers start beating expectations rather than missing, because I think they've missed the numbers now, the overall Macau numbers that come out on the first from China, like 3 or 4 months in a row. So that's a contributing factor. And then the other thing that's going on right now, which I think is, so I'm using a little bit of fundamental thoughts here along with the technicals, just kind of proves to me where I don't want to be in this space is, they're starting to legalize sports gambling. They did it in New Jersey just a couple months back. And it seems like Correct. If New Jersey's going to do it, other states are going to do it. And I could tell, from my personal experiences, I go to I meet up with friends once every couple of years. We go to Vegas and we go to the sports books right around the beginning of football. We will probably still do that, but I think a lot of the online gambling revenues are going to go other places than going, previously you had to go to a sports book to kind of do that type of thing, unless you were going to do that illegally, which I don't know anything about. But what my point is that they're going to be losing some revenues, from online gaming, going basically online now legally.
Great analysis, man. I agree with all of it. Like I said last time we talked about it, my entry point into WYNN was, and usually only the guys you hate at cocktail parties do this, but I'm going to be that guy real quick. We got into it literally in a live trade brief. I was looking for I was an MGM guy mainly, and then unfortunately the Mandalay Bay incident happened. So I'm like, ooh, oh boy. But this was, hey, breaking news, Steve Wynn, is Harvey Weinstein type of thing. So we got into it and had a nice run. And then we covered this in our live trade brief today a little bit. 150 was kind of it was a nice round number for Wynn. It held it here. It eked and held it, and now it's technical, or it's a momentum trade down. So I would hold the Jan 20 that we have. I wouldn't initiate a new Jan 20. I'd kind of do what Christian said. I'd be back at maybe looking at an MGM. I got to be honest with you. A couple weeks ago, MGM announced that they were countersuing the victims of the Mandalay Bay shooting. And I thought it was an Onion headline. I thought it was a gag headline, but it was the truth. I mean, if you're Gordon Gekko, you think that's a phenomenal headline because it's better for the business. But that was just awful. The stock didn't really get kicked that bad because maybe people were too shocked. So, MGM is probably better at this point. It was my silver medalist in the space behind Wynn as my gold medalist. But now this is, like Anka said, unless she sees a little bit of a heartbeat back above 150, I think it might be a short. And, if you're new to options, you can – what's cool with like a long call diagonal or synthetic stock position all the way out to Jan 20 is you can be essentially bipolar. You can believe that, as Christian said, the Macau numbers are still good, but they're being less good, right? But you can still believe, hey, man, in a year and a half, Vegas, Macau, none of those places are going out of business, whether it was after 9/11 or the financial crisis. I remember the financial crisis, 2009. Everybody canceled their off-sites, and we can't afford to go to Vegas for our annual, and they're all back. So if you think that the thing is still semi-decent, hop in your time machine and go out to Jan 20. But as Christian and I covered, man, you can sell the hell out of the front month with some, bear call spreads or front month upside calls. But for now, I'd probably be looking over towards MGM. But okay, that was a good one. Let's go. Oh, so GDX. So GDX is kind of it's the miners. I know a lot of people trade the GLD, but this is actually the VanEck Gold Miners ETF. What do you? Oh my! This chart. It's funny. This chart almost looks like WYNN. It looks like it's just kind of falling off a cliff here. What do you think of the GDX?
Totally. Well, it broke the first level of support at $20.80 zone, and right now it's accelerating a little bit to the down to the next support level, which is the 1850. I think that unless we see some heavy volume that will dry out all the shorts, we're not going to see a reversal. So I think we still have to have a little bit of patience. If you wanted to short this, you had to short it a little bit higher, not here, basically on the breakdown. But if you are looking to go long, this is not the time. This is definitely not the time to initiate a long. I would wait to see if this little higher low here is going to hold on the monthly chart. So far, it failed the first area of support. It fell through a little bit, but I think it's not ready yet. It's a very confusing pattern, and usually, if I have to do this much analysis to look up a symbol and to try to make sense out of it, it's definitely a big sign to stay away from. So let's see how it reacts in the next few days, or probably into the end of the month. And let's see if it has more follow through to the 1850 zone. If it's not going to rotate from that point, then we may actually continue the big downtrend that we have been in these miners. And we may probably visit again $15 and $13 to $12.
It does. It almost looks like that's one big dead cat bounce there, and it's getting ready to roll off again.
Yeah, exactly. But I think that we will know more if it will be approaching this 1850. So I wouldn't do anything until then. And so far, the volume has been a little bit low, so it has not accelerated.
Perfect. Christian, what's your take on the miners there?
Yeah, I'm with that view as well. Whenever I look at gold miners, I always look at gold first to see what's going on. And this gold trade, I would say this has been so difficult. People, I think, are kind of wondering what's going on with gold. Why is it not going up? You've got all kinds of currency things going on globally, and gold just continues to break down. Who knows? You could speculate. You could come up with, whatever conspiracy theory. Maybe central banks are selling gold reserves. I have no idea, but I know that this thing is a ridiculously hard trade right now. With gold just continues to move down, doesn't catch any type of little move consolidation. It just goes lower. So eventually this thing will probably come up, but I have no idea when that would be. And I didn't even look at gold miners. I'm looking at gold. But if you look at GDX, it's following gold. And, when trades get too difficult, when something just looks a mess and it looks challenging and difficult, just stay away from it and go on to something else, because I have no clue. I would say maybe there's some support down here for a short, but it's just, there's too many things that are going on with gold that can affect it. Currencies and just things out of your control. So yeah, I would stay out of it. Not even long or a short.
Well, it's funny. I think you and I were talking beforehand about the market or a stock can remain irrational longer than you can stay solvent. So I think Christian just hit some pretty fine points there, folks. If something ain't doing what you think it should be doing, you're wrong. Not the stock or the ETF. It's priced where it's supposed to be. And it's interesting because gold and the gold miners are two different. I mean, they both have the word gold in them, but they couldn't be more different. When you think about it, the GLD or gold itself, if you got it hidden behind your Picasso in your wall, think about it. Gold or the GLD doesn't have a CEO. They don't have earnings. They don't have, they don't have workers that can go on strike. They're not impacted by an increase in fuel, for example, to power, all this stuff. So the gold and the gold miners, two different things. But I'm with Christian. I was a GLD guy for years until it stopped doing what I thought it should be doing, whether it was a hedge against, world freaking out events, or a hedge against inflation, or there was a lot of things. So I just sat there. I'm like, hey, man, this thing ain't doing what traditionally or what I learned it should be doing. So I just I packed it all in at that point, and I just kind of do a drive-by every once in a while and eat my popcorn. And no trade, to Christian's point, that no trade is a trade. So I'm not big on the GDX, and like we've talked about a couple times, it's a target-rich environment in a lot of different areas. Who was the Paulson? Not Hank Paulson. He was the Treasury Secretary. Whichever Paulson predicted the housing crisis a couple years ago in the GLD, he was he was long, and a bunch of hedge funds. You can Google this. A bunch of hedge funds, it literally teamed up to try and put him out of business, and the GLD ended up imploding on that. I forget. I got to dig out the story, but do a little research on that. So remember, you're also at with anything like that, and gold's an emotional trade. Like I said, there ain't no CEO or news or this or that. So just, I don't know. It sounds like we're all kind of a little leery on the GDX. I don't want to keep rambling. But this one's got a little bit of meat. We all know the Russell, or at least the ETF for the Russell here, the IWM. Anka, what are you seeing on your charts?
Well, it's a really nice, strong push to the upside in the last 30 minutes in Russell into the end of the futures session, because I'm a day trader. I'm a futures day trader. So I day trade the indices on a daily basis. And Russell has been one of the strongest indices today, leading with 1.16%. Really nice move to the upside into from that 1680 this morning. Accelerated, and right now, although it's trading into resistance, it has a really nice bull flag. From another perspective, I still think it really needs to an IWM really needs to trade above this 170 level in order to accelerate higher. It has a really nice weekly bullish aspect to it. But unless it breaks this 170, I don't see it. Like, I think it's literally, it's like it has a lid on it. So it has prevented price from accelerating from this price. It has been also one of the fleeciest of this month. up and down. It's been quite a swing, but today, I mean, the move that it had today, almost 20 points to the upside, that is like huge. That's a huge move, especially for Russell. For, short term, I see it going a little bit higher, just grinding higher from resistance to resistance. It's not going to be an easy trade. But ultimately, if it breaks this 170 level, it's going to blast higher. It's definitely going to blast higher because let's not forget, I'm going to put up the daily chart here. Let's not forget that we're coming from a really strong uptrend after a very, very sideways chart pattern that we've had February, March, April. It was like chop, chop, chop. But what index wasn't in this chop? And then we accelerated higher, and now we're forming this really nice pennant here. It's a bullish pennant that I'm seeing here in on the daily chart in IWM. But like I said, 170 is going to be an issue. I'm going to continue to day trade it, and in fact, I'm still continuing to day trade, to the long side. And I know that sometimes in my trading room I sound like a broken record, but I keep on reminding my members that shorting is not an option today. So we keep on going long. So I know, but it is what it is. So I'm not fighting the trend. It's not that I'm a perma bear bull, because I'm not. But I just trade what I see on my charts, and so far the money is still to the upside. And until proven otherwise, until trades stop working, I'm still going to continue to go long on this. And like I said, IWM, I still see it up big over 170, going into the 173, 175 levels.
That's great analysis. I think one of the things that helped it out today was the some good retail numbers, because obviously the Russell's got 2,000 names as opposed to the old stodgy Dow or the S&P. I think tomorrow with all that ton of macro data coming out, the retail sale pre-market 8:30 tomorrow morning, we're going to get hammered with a bunch of macro data. So it'll be interesting what the Russell does. But what do you think, Christian, as far as IWM?
Yeah, and I liked everything that Anka said on this, and it's funny because we looked at 3 or 4 names with downtrends, and you go over right to the Russell, one of the strongest.
Exactly. Yeah.
Which is cool, right? To kind of look at this, and this is I think has been a great trade whenever there's global headlines about either tariffs, currencies, and when we start the day and small caps are down like. It doesn't even have to be down a 0.5%, but down 30, 40 basis points. This has been my go-to trade because, it's very sheltered for all of those risks, but it gets kind of caught up from time to time in just being risk off. But it's held very well. And this is kind of, I think, one of the things that you could, continue to be bullish about the U.S. stock market was just seeing how the small caps, right? Small caps often lead the market. And, just as Anka said, right around 170, I have it on my charts right around 169.30, which is the top of value, that red line that I've got drawn here. But, I think, we're splitting hairs here. There's been some great strength in small caps until they really go lower, and that would be a great warning sign too for the overall market. If it dips below, say, 166, we have a problem with the U.S. market. But until then, I think this is also ready for breakout. It's just a matter of time. And if you're not willing to kind of go long the small caps, basically just wait until they come to you. Any of those days where we've got some type of headlines, and I think with this administration, we're going to get more. We're going to get more global headlines. Exactly. So you're going to get your opportunities to kind of go in and buy. You don't have to chase this market. You don't have to chase a breakout. Anytime you get a little bit of a red day is a great day. We did this yesterday in our trading room when small caps started the day down, or was it yesterday or 2 days ago, where we started down, 0.5%, and just small caps are just, take off like they've got a motor on them. So I like it, and I'm looking for the same thing. I'm looking for a breakout above 169.5.
I think that's awesome. So both you guys, I think, put it right through the bullseye. It's interesting because whether you look at the Dow or the S&P, these are kind of move on headlines, and this is going on in China and all sorts of stuff. But it really does seem like the Russell has been, you know, I'm not gonna say whistling past the graveyard, but the it's you know, these big talks about trade wars, or, you know, maybe a hot war with Iran and oil and sanctions and all sorts of stuff. The broader markets seem to react to those, where this, like Anka said, this thing's just starting to, you know, it had, or Christian said, it's kind of your go-to. So, but as I said, tomorrow morning, pre-market, we get retail sales, the Empire Fed, productivity, labor costs, the cap rate, industrial production, business inventories, some housing numbers. So it's a canary in the coal mine, and might lead us in and out of bad. And right now it's you know, essentially not saying there's anything potentially bad out there, which, you know, when everybody's sounding bullish or everybody likes something, that might be the time to say, hey, what's going on here? Because Chris and I were joking before we jumped on the air here, and I said, you know, I like to remind my members, you know, the market only cares when it cares, and that sounds blindingly stupid, but it's also blindingly brilliant. You know, the market only cares when it cares. But right now, the Russell, hey man, everybody on board here. But like I said, that 170 really does look to be some resistance. If we break that with any sort of airspeed to the upside, you know, Goldman had a good report out the other day that let's say when, not if, when we settle our trade war with China, it's going to be off to the races. I mean, I'll put my rally hat on and just, you know, salute that thing at full attention. But for now, you know, with things simmering, just the market right now feels like musical chairs to me, and Anka, Christian, and I, as professionals, know that we need to have a chair when the music stops. Just make sure you have a chair for when, not if the music stops. Okay. What was next after that? What WTW? Anka, how about man, I don't know what this is. I don't trade this one, so this will be Oprah. Weight Watchers. Anka, how do you feel about? My God, that looks like WYNN, the stock. So how do you feel about Weight Watchers there?
Wow, it seems that everybody got on the diet here. Everybody was dieting, and now everybody fell off the diet.
Exactly.
Well, there's and I'm looking at the daily chart. There is well, there's a solid level of support here at 75. That's why we're getting this. We've got this bounce today. It's coming from a prior pivot, and this is from February and March. And then we also have a low here back in June 1st. Actually, that launched this big move into the $105. And right now, everybody fell off the wagon, testing this support level right here. Well, the thing is that to me, it doesn't look very appealing. I think it's still into like thin air, although we do have support from price, but it's not sustained by any moving average so far. So I would like to pass on it. I need a better setup. So far, it's trading below the 3 moving averages that I use. That's the 50, the 20 simple moving averages, and the 10 exponential. They're kind of fanning out right here. I really don't want to take any position. So I don't have any bias right now. It looks like it may want to bounce and continue a little bit higher, but it may look like it may probably want to go to that $80 or I don't know, $82 and then turn around, probably go back into the 70s. So if, like I said before, if I have to do that much thinking about a stock, you know what? There are other 4,000 to 6,000 stocks that I look at.
Yeah.
And I can pick something that I really, really like and really want to trade. So this is not something that I would throw my money into.
Yeah, there's a couple thousand optionable or stocks and ETFs to begin with.
Right.
So like we jokingly said earlier, there's a target-rich environment out there, and Weight Watchers just doesn't look target or rich. Christian, what do you think?
Yeah, and I'm going to have to be more controversial maybe on some of these other names that we've got further on the list, but I agree. The name just had earnings, and going back to what I see, kind of with my hindsight glasses on, my 2020 vision. This thing did fail right before it reported earnings. It failed right at the 50-day moving average. It was not able to get above that. Kind of gave a little bit of a hint before earnings, but I have not really played this one either. I've looked at it a couple times because I know that people in the U.S., we're going to need Weight Watchers with all the kind of, food delivery services and everything else that we got. So I do think Weight Watchers will be in business for a while. but I think right now it needs to digest this earnings move. And
I see what you did there. Digest.
So I think it needs to. I'm not sure if it's going to be a bear flag here. I think it just needs a little bit more time. You do have the 200-day moving average support. What I would wait for, and kind of what I do during the day, is I would wait for some institutional buyers to say, "Hey, this is I'll do it again. This is appetizing to them."
Hey-o.
Oh, sorry.
That's good.
It's after hours. Come on.
Yes, exactly.
So I would wait for some institutional flow to start buying in here. If not, I would just give it a little bit more time, as Anka said.
Yeah, I'm not going to jump on the scale and help you guys out anymore. But yeah, that falling knife comes to mind right there. That just doesn't look good. Institutional support, or maybe another round of Oprah buying. Isn't she like the shareholder in here, or the spokeswoman, whatever it is? I'm not a big Weight Watchers trader. Don't trade the space, and a more target rich environment out there. Now we are starting to get into, because Chris, I want to pick your brain on this JD and the Chinese stuff. But Anka, let's go with JD, which is it's a Chinese internet company. What are you seeing on your charts?
Oh gosh, I never liked the stock. Okay, it's so fleecy. So you got to make sure that you have a pretty wide account when you're trading it, especially with size, because it just loves to whip around. What I have here is the monthly chart, and it is sitting on support from this prior price action that we've had a long time ago. But as you can see here, we're kind of failing, and I see this pattern failing more and more since establishing a high into the $50 and change, and then it started to make these lower highs on the monthly. Going back to the weekly, there's a bunch of chop that I see here. So I don't see anything tradable right now. You could see that, there are a lot of bottoming tails, a lot of topping tails. Like I said, this is sort of like a lot of fleecing going on here. There's nothing that really appeals to me. I mean, yeah, you can make about $2 in a week, or $3 in a week, but with what risk? Because this can whip up or whip down like nothing. So I'm trying to stay away from it. Every single time when I run it through the scanner, I'm like, ugh, JD. So I just I just go over it very quickly. I just don't like the way it is trading, and I really don't like the pattern on it as well. I mean, this is just a bunch of chop since last year. Yeah, since the gap up last year has been chopping around.
Yeah, it looks a little like a heart rate monitor. All right, Christian, lay it on us, man. Yeah,
I mean, the whole group is getting absolutely smoked. So, JD is one of those. Baba's getting smoked. Baidu is getting smoked. Three Chinese internet names reported. I may be missing one, but WYNN, which has been a real nice performer, reported. YY reported. Hua reported. These things, it doesn't even matter what numbers they're putting out. People are just selling them. So JD reports this week. So this is the whole KWeb ETF. This is the Chinese internet names, just names that I'm going over. 10 cents in here as well. So, I mean, it looks like, this thing was down 4.6% today. And what's crazy about this is the overall U.S. market. If you look at the U.S. internets, and they're doing the opposite, right? They're going up. Maybe stalling here a little bit at the 50-day moving average, but certainly not breaking down. So it just looks like people they don't care. The institutions are just selling right now when you have moves like this. So the sentiment is getting pretty washed out in the group. I don't know if we're at that point, but you do have JD earnings. I think they come out tomorrow after the close, or no, maybe it's is it the 16th? Let me just double check.
Yeah, August 16th. So
it's in the morning, not tomorrow, but the following day.
Correct.
So, maybe that could possibly turn it around if they come out and have a killer earnings report. But I think it's going to be difficult, and it may be difficult for this group until Baba reports a week later. And if they come out and say something different. But I think people are really getting worried about China, besides what we're getting every day with, the tariffs and what the media is focused on. They had retail sales last night. They had industrial production, and they're slipping. So we talked about what happened to the casino stocks when the Macau numbers slipped. Well, China, the economics are slipping. So you have to see some type of uptick. You have to see something either resolved, I think, at this point. And if that happens, I would probably be one of the first people to give these trades a try if it gets resolved between the US and China, because the sentiment is getting pretty washed out in this group. But until then, there has to be something positive. So I would almost wait for earnings in JD and BABA to see what's going on here. Or wait for some type of economic statistic that comes out a little bit better, or the trade tariffs, because it just looks like a bunch of bad things right now that are happening, and I think it's concerning until something changes. It looks like there might be more pain to the downside.
Agreed. You mentioned it. Their fixed asset investment grew 5.5%. The matching a 1999 low. So when you see these type of headlines in a journal, it ain't good. China's growth engine sputters as it battles U.S. over trade. Here's an even more disconcerting one, and the Times ain't no friend of the president. Trump's trade war is rattling China's leaders. So, social unrest breaks out in China after panic bank run on peer-to-peer lenders. So we're bearish on FXI. Remember, folks, and I got nailed in an FXI trade right here. I was a little bearish. So these past couple times on FXI, the government stepped in to save capitalism. Here was a PBOC injection. Here was one. But each time that happens, the market, I called it a short-term sugar high. The market goes, hey, all right, cool. They injected some liquidity. One potato, two potato. Average trader, wait a minute. If they're getting involved in capitalism or propping the market up, that means it's worse than they're actually telling us, and the thing ends up going lower. To be honest with you, I'm not I don't trade JD or anything like that. If you're gonna be in the services retail space, there's only one name to be in, and you can obviously guess it, and it's Amazon. I think we're supposed to talk about it in a little bit, but I don't want to run out of time. So Christian's giving good advice, saying, hey, I keep my powder dry until we see some of the earnings roll off the flight deck for JD or even or BABA, but I don't trade either one of those either. This is the Death Star, folks. This is taking over the world. I said back in October, get out of all the limousine liberal tech stocks and just plow it into Amazon. Jeff Bezos is being as quiet as a church mouse. You haven't seen the dude. He ain't saying a word. He's just so instead of a JD, if you don't want to wait for earnings or whatever, I think Amazon's the place to be. They seem to, I don't use the word like immune to the trade wars, but it just doesn't look as volatile as some of that JD stuff. So to me, I'm an Amazon dude, and I think that's just the way to go. Okay, let's.
We had a request from the audience for SQ Square. You want to take that, and then
you know what, David, let's take NVIDIA first, and then we'll take that one, because I'm sure probably all of us have a little NVIDIA take, but remind me after NVIDIA, and we'll jump on that one. Okay. So Anka, what are you thinking about NVIDIA?
I love NVIDIA. Okay, so this is something that I love to trade, and I think it is way heading higher. Technical charts promote higher activity in it. We have a very strong pullback buy pattern that occurred, and this is the weekly chart that occurred several weeks ago, and we're trading into a continuation pattern. I don't think there is anything that is going to stop it to hitting a 266 target and into a 269 and going again into all-time highs. So NVIDIA, definitely, I've been playing it multiple times throughout this year, and it is one of these names that is just coiling on the monthly chart for a break higher, and also on the weekly chart, daily chart, again, it's just not giving up. It's just like the Energizer Bunny. I love it. buy every pullback that I buy any pullback that I can based on a daily chart, so I can have a limited risk. I'm a swing trader. I think it's a great, it's one of the best stocks to own.
Wow, that was you're making me feel bad that I'm not in it. My God, that was awesome. Christian, how are you feeling about NVIDIA?
Yeah, wow, nice conviction on this. Yeah, so this is another one. This is going to be an interesting earnings report. I will be looking to play this for earnings, and probably, I think you kind of continue to play this name. It's got, and to the upside. I just saw CNBC talk about, maybe it was about a week ago, talk about, oh, the run in NVIDIA might be over. I don't know why these guys try to always time when these things are going to turn and go down. I think that the trend is your friend here. It's up. You stay with it. I will say this. I think it's been kind of frustrating the last 6 months because I've tried to trade this with options here and there, and it's been a little bit difficult. I've taken some small positions because it has recovered. You just have had to really time it very well. Probably, something in leaps or even in stock has been a better bet because it has been, just riding that trend higher. It just hasn't, the velocity of the move has slowed down a little bit in the last few months. But that being said, I will be looking at a bullish earnings trade for this name, and I think you continue to work with it until it breaks its trend and to go along with it. And also its little brother right now, AMD, is not doing too poorly either. And I know that they have a whole slew of chips. Some of them overlap with AMD, but it seems like NVIDIA's chips are the best out there.
I'd agree with that. I'm not a big NVIDIA guy. I haven't traded it for years. Again, subtle or not so subtle plug. They're actually talking about on CNBC right now, semi-surge. So their ears must have been burned. I think out of all the houses in that neighborhood, I think NVIDIA is the best one. But that's the neighborhood. I'd say the state and the world is Amazon. Amazon with its S3. I mean, Amazon's getting into every space, whether it's healthcare, Whole Foods. Jeff Bezos is building his own FedEx and UPS. I like the space, but it seems like Jeff Bezos is sitting there biding his time to see who wins in each space and then goes and eats them. So I like NVIDIA, and I list that. If you missed what Anka said, please make sure you watch the replay when David sets it out, because she had me at hello. That was a pretty damn good brief there. Okay, we got about 3 minutes left, but we can go over just a little bit. David, you said Square, SQ?
Yeah, SQ. And
okay.
You guys we might go over a couple of minutes, but if you have any individual trade ideas.
Yeah, absolutely. That's what I wanted to do after Square. So
we were talking about that in the live chat about how that was your idea originally.
Yeah. Oh, cool. Yeah, exactly.
Part of the shows.
Yeah. Well, it was
that in there.
It was my idea because I wanted to steal some trade ideas from these smart people. But Anka, why don't you hit Square first?
Okay, but I want to go back to NVIDIA, and I love what Christian said earlier about frustration in options. In regards to timing in NVIDIA. Yeah, that was one of the biggest things with options, and that's one of the reasons why I went a little bit more into swing with NVIDIA rather than options. So if our listeners, want to balance out and take some options and also take some stock, definitely that's a great thing to do. And just a reminder, earnings in NVIDIA are August 16 after the market close. Square, this is something that I have not traded in a while, and it looks very nice now that I see the charts. And in fact, I did have some of the traders point out Square for me. I just left it off the radar. It just slipped my radar, and in fact, it had a really nice pullback on the daily chart a few days ago. I think it was on Friday. So Friday, nice pullback release, and actually the breakout that happened yesterday really nice over $73. Like what, we're going to bring out that special indicator, that moon indicator. I think it's definitely going to go higher. This is the way I see this pullback, sort of like a bull flag here. So I definitely see it. I didn't run any projections on it, so I can't, I can't make any comments on targets. But I could still definitely see it higher. So Square is a nice, really nice, maybe pullback buys, maybe watch for a pullback into the $73 zone and reversal and continuation to the upside. This would be an idea.
Perfect. Christian, how you feeling about Square?
Yeah, I love Square. I've been long Square for a while. I'm long. I have a cash position in Square. It really gave a crazy move on earnings, by the way. It started to sell off a little bit, and buyers just ate this thing up. But I've just fundamentally, besides the chart, which looks, the chart looks awesome, right? It's just been anytime there's a dip, it gets bought. So at this point, if you're not in it, I would wait. It does come back eventually to the moving averages, which end up being a good buying point. But I love the business. I'm very bullish the U.S. consumer. Things like unemployment rate at really low, huge lows right now. Optimism very high right now. People are spending, and people go to the terminals. If you ever, I live in New York City, and I use the Square terminals all over the place when you go get a bagel or coffee, and it's so easy to use. So I like the product itself, and I think the U.S. consumer is spending, and they're going to continue to use Square terminals, and businesses are going to continue. We talked a little bit about that. Small business optimism is as high as it's been since 1983, the second highest reading ever. So small businesses are using these things, and I think that the trend is your friend, and the U.S. consumer is cooking as well as small businesses are. So enjoy it. Be long Square.
Great. I'm not even going to pile in there. You guys nailed it. Yeah. Christian's alluding to the NFIB Small Business Index. And that's one of the, I'll go ahead and kick off, kind of wrap it up here with the trades we like. There's a lot of good macroeconomic data underneath this. Well, other than that, Mrs. Lincoln, how was the play? We'll find out tomorrow morning with a lot of this stuff. And then on Friday, we get U of M consumer sentiment, the Conference Board's leading index, and some inflation expectations. So it's interesting that, this time last Tuesday, I had a long vol trade on with VXX that was underwater significantly. And a bunch of my members were like, hey, what are you doing with this? I'm like, nothing. It's, a long vol. I said, with my luck, something happens Friday to freak the markets out. And Donald Trump, more or less threatens to go to war with Turkey Friday morning, and that volatility sprung to life. So right now, as we sit here after market hours, Christian nailed everything, man. There's some good airspeed on the airplane here, and that's why I think the president feels that he does have kind of the wind at his back to play this out a little bit more. So as I kind of wrap up, let me pick my own brain. I am bearish on FXI. It seems like, and Anka knows the stuff better than I do, but this, potential triple bottom here, and each time it hits this bottom, it seems like the PBOC jumps in to try and save a little bit of their capitalism. And we know the last time this happened, China, technically, most of their markets are in a bear market right now, and the last time this happened, they banned short selling. They rounded up like 200 financial reporters who had the nerve to write bearish articles, and it got ugly. If you remember, what was that, 3 years ago, 5 years? Whenever this was essentially their 2009 right here. Don't know if that's going to happen again, but we're in the middle of a trade war, and the adults aren't even talking. Steve Mnuchin, Larry Kudlow, and Peter Navarro have said over the past couple of weeks, like, we're not even in the room with these guys. So that ain't good. So if you're looking for kind of to pick my brain, I'm a little bearish, or not even a little bearish. I'm a lot of bearish on FXI. So that would be my my parting free trade there. So Anka, what looks good to you on a daily basis, or what do you like to swing trade? What's on your flight schedule?
Well, first off, I like your FXI. I think it looks like a breakdown. I'm actually looking at JP Morgan, and I have it on my radar. I had it on my radar yesterday before it started to pull back a little bit further. It is on minor support. I really like the fact that, it kind of like held yesterday's support level and it advanced a little bit, just tapping onto the 20 SMA at 115 level. I would have loved a little bit more stronger finish to the day today, but well, I'm going to continue to watch it tomorrow. And if it trades over 115, I may want to pick some up for a continuation higher into these prior highs into the 118 as a little swing. And one other trade that I have on my radar is Disney. And Disney had a really nice pullback into the 20 moving average, had about 1, 2, 3, 4, 5 days into the moving average, and right now is trying to dissolve the 10 EMA. And this 10 EMA here comes also into these prior highs from early December and January. So if it should find some kind of support between 114 and if it should blast over this 113 and change zone, I may look for a push higher that may take the price back into the new highs.
Sounds good. Christian, what's on your radar, man? What are you liking?
Yeah, and you might like this idea as well, because I'm also a very big Amazon fan. I echo what you were saying. I think they're crushing it in multiple business segments. So the problem is with Amazon and some of these other stocks, which it's really good for I think what we teach on a daily basis. Amazon is going to be where did it close at today? 1919.
Exactly.
Yeah. So options are the best way to play these stocks right now because they're not splitting them anymore like we used to see back, when I started trading. There used to be a stock split every couple months in some of these names, but they're not splitting them anymore. So really options is the best way to play this stuff. But I'll go to kind of the poor man's way of playing Amazon, and that's through the XLY Consumer Discretionary ETF because Amazon is 25% of this ETF. So it's a little bit easier to play it through XLY. And I also like some of the other names that are in it too. You have to like the other components, which
Home Depot is in there, right? Yeah,
Home Depot 7%. You also got Mr. Netflix in there, right around 5% as well. You got Nike in there and Disney, which Anka mentioned as well, which I also like a little bit of Disney too. But I think that's a real nice, easy way to kind of wrap a bow regarding it, getting exposure to Amazon and some other names that I think are benefiting. If you like that theme that I talked about, where I think that the U.S. consumer is doing very well, and also a little bit sheltered to everything else that the storm that's going on outside of the U.S. borders.
No kidding.
Whether it be in Turkey and China, wherever else is the next area of disaster. Not a lot of exposure where things you can't really tariff Amazon and Netflix. So I think that's a good place to be right now.
That's a great way to put it. It really does feel that, knock on wood, that Amazon is kind of immune to, a trade war type of thing, unlike a lot of other things that we discussed today. And one of the things that we haven't talked about that's on my, it seems like it's a world away, but it's not. I mean, next month, you're really going to see the president on a plane, and you're going to see Nancy and Chuck on TV because we got midterms coming up. And the president, what is it? October? Yeah, the fiscal year is October 1st. The president has said, hey, I'm shutting down the government if I don't get border wall funding. Oh, and by the way, the Iranian sanctions kick back in the fall. And so to Christian's point, man, it really does seem like outside our borders, the world is burning a little bit, and we're just kind of whistling past the graveyard. And all of that is true until it's not true. So, I've been on CNBC. I know executives at CNBC, they already have these, they call them the lower thirds, kind of where all the, the breaking news, they already have all this stuff written up, like war with Iran or market, trade war fears, crush market again. So Christian and I were laughing before we jumped on the air. I said, this is kind of a hold your nose rally. This is a, hey man, I'm going to smoke the hopium and bid this thing higher. But the hold your nose part is make sure you're long some volatility or make sure you have some protection because it's not a matter of if, but when, we get a little bit of a pullback, or a big lot of a pullback. I call it the Fred Sanford, where you're kind of clutching your chest and dropping dead here. So, but hopefully that won't happen. Okay, Anka, I'll tell you what. Why don't you wrap up and let us know how we track you down and get a load of what you do over there at Trade Out Loud.
All right. Thanks so much, David, for having us on the show. And if you guys want to get a hold of us, you can reach us at info@tradeoutloud.com if you have any questions, and more than happy to answer everyone. And also, if you want to find out more about our products and services, you can visit tradeoutloud.com.
Awesome, Anka, and looking forward to doing our next live event.
Oh, definitely. I can't wait.
It's going to be fun. We had a blast down here in Boca, so I'm looking forward to it.
Yeah, maybe, Christian, you can join us in February or March. Get away from New York.
I was just going to say, man, you should. We'd love to have you.
Yeah, is this through? You guys did was it the Trader Show that you guys did?
No, it was just us. We put together our own event and invited a bunch of cool speakers. So yeah, we should talk. Yeah, absolutely. I'm up for that. Awesome. Okay. Awesome. All right, buddy. How do we get? How's everybody online get a hold of you and what you do?
Yeah, it's just TribecaTradeGroup.com, and basically just like we're kind of talking. This is the analysis that we do all day long. We look for. I've got a little bit of different spin on option activity. I know there's a lot of momentum stuff going on too, which we have traders that focus on that too. But I really like to do my analysis. Kind of take my time and kind of go through setup. So if I see something like we saw a nice not restoration hardware. Ralph Lauren calls today, and I really kind of take a look at that and analyze that and structure that where I think there's good risk to reward. So if we see something interesting on the tape, sometimes I don't take that particular trade that we see. We kind of go through and pick out maybe a call spread or selling some premium there. But you can find us at TribecaTradeGroup.com, and to be a part of our trading room, you can get the first week for just $7.99. So it's basically $1 a week to check us out. So thanks again for having me on the panel. Love to be here and love to hear your guys' thoughts and so forth, and to go through some charts and talk markets. It's a pleasure as always to be here.
Awesome, man. Yeah, likewise. And we'll definitely talk about maybe doing an event together. This would be fun. David, thanks for having me again. I appreciate it. Folks, if you're interested in swinging by doing what we do, you can just head to our homepage, topgunoptions.com. That's pretty easy to remember. And then you can just take a 2-week test flight into kind of either our retirement portfolio or I kind of maybe know what I'm doing portfolio, and then our weekly options portfolio, which is we've been having absolute blast trading our favorite. We have a 94% win rate in our weekly options year to date, which is just obscene, and I don't want to jinx myself, but it's mainly been trading Amazon spreads, man. Each week the gift that keeps on giving. I think the 2 losing Amazon trades year to date were the Trump tweets like antitrust harumph, and then he ran after some other shiny red ball. But yeah, no, a great time. I appreciate it. I actually got learned some stuff from you guys, which flying the F-18, almost having 3,000 hours in the airplane. Up until my last flight in the Hornet, I learned something, and I always learn something from my fellow wingmen and wingwomen. So it was great being with you guys again today. So David, thanks again for having me, and I'll turn it back over to you.
All right. Thanks, everyone. Just a quick reminder, be sure to subscribe to Timing Research on YouTube and your favorite podcast network. And you can also go to TimingResearch.com to get access to any of the past show archives. And be sure to join us for both shows next week. Crowd Forecast News at Monday, 1 p.m. Eastern Time. Norm Hallett and Lee Harris are going to be first-time guests on that one. And then be sure to join us also for the next episode of this show, which will be the 1-year anniversary show of Analyze Your Trade. So that'll be episode 46, Tuesday, 4:30 p.m. Eastern Time. And just want to thank all my guests again for this week. Matt Buckley of TopGunOptions.com, Anka Metcalf of TradeOutLoud.com, and Christian Fromhertz of TribecaTradeGroup.com. Thanks, everyone.
Thanks, David.
We'll see you next time.